trading.
Okay.
You know, when I was a graduate student here, I had just gotten married, and I had $5,000, and from wedding gifts. So my wife and I, we decided that we'd invest it. So we didn't know anything about investing. So I went to Merrill Lynch, and I asked her. I had a couple of stocks that I thought might be good, and they said yes, those would be fine. So I bought these stocks, and they weren't good. And they weren't bad either. They just didn't do anything. So after a couple of months, I went back and said, I need a little more activity here, these stocks. Nothing's happening. He said, you should try soybeans. And I literally thought that was something you ate. I didn't know. But, you could trade these things. But he explained to me, yes, you can buy 5,000 bushels of soybeans for a mere pittance. You put it down, and the beans are going to go up or down. Or you could buy 10,000 bushels if you're particularly aggressive. That was 2 contracts. And he explained why the wisdom of Merrill Lynch was soybeans were going up big time, and you'd make a fortune by being long soybeans. I bought it, and I bought 2 contracts of soybeans. And indeed, within the next couple of days, they did shoot up, and I was quite ahead. And there was leverage in it, and so on. And I went, and I was talking to a mathematician a few years older than me, who was a postdoc at Berkeley, and I told him what happened, and I said, do you have any advice? He said, yes. I said, what's that? He says, sell it immediately. And that was great advice, which I didn't take. And of course, it then went down, and I lost some money. And I found myself getting up early in the morning and going back and forth across the Bay Bridge to catch the opening of the Chicago soybean exchange. And they opened at 10:30 in Chicago, which was 8:30 here, which was, you know, the crack of dawn for a graduate. So who's going to get up that? I mean, I had to get up at 7:30 in the morning to schlep across the Bay Bridge and check and see this screen. And it turned out, I did this for a couple of weeks, and I actually ended up ahead. But I came to the following conclusion. I was either going to write a thesis in mathematics or trade soybeans, because it was impossible to do both at the same time. So I gave that up. But always in the back of my mind, I liked this trading business and found it interesting. And so I got back into it.
Okay. And then you founded Renaissance Technologies, I guess.
Yeah.
And it's been an unbelievable success.
Yeah, we've been very lucky.
And how much can you talk about what, you know, how much?
Oh, that's much more secret than the national security.
That's what I figured. We
let's
can
get
all
serious.
keep it among ourselves.
Oh, okay. If you don't tell anybody, you know. Well, I should say that I continued to do mathematics until the mid-'70s or so, but I had gotten very frustrated with a problem, which is still unsolved, and I had come into a little money through an investment that I'd made. And I was in between wives, but I didn't know that I was on the wrong side of the first one. I didn't know that the next one was coming. So it was a time that, you know, it was a good time for me to do something else. But when I started, it was fundamental. It had nothing to do with mathematics. It did not occur to me that one could use mathematics in trading. I got very interested in currencies. I read the newspapers. I read books. I read all kinds of stuff. And was plain lucky, I think, for a few years. We did extremely well. But then I started looking at the charts and things, and they didn't look completely random to me. So I hired a great guy who was the world's greatest cryptanalyst. And I said, would you come and work with me? We're going to dope out these and make some systems, build some systems. And he came, and we started building a system. But he was really interested in the markets themselves, and one day he didn't show up. And then he called. He didn't call, he didn't do anything. He just didn't show up for work. And then he came in around 1 o'clock. I said, where you been? He said, well, you know, I'm tired of doing research. I wanted to do some production. And that was NSA parlance. He said, I'm tired of doing R. It's time to do some P. I knew what he meant. I said, well, what P did you have in mind exactly? And he said, well, Margaret Thatcher, the pound has been held down by Margaret Thatcher. She's holding down that pound, but she can't, she's been sitting on it, but she can't sit on it for any longer, and the pound's going to run up. I said, does this come out of the models we've been building? He says, no, I've been reading everything. I said, I wish you'd come in a couple of hours earlier because Margaret Thatcher just stood up. He said, what do you mean? He says, well, she's let the pound go. He said, how much is it up? I said, it's up a nickel already, 5 cents. He said, that's nothing. It's going to, go. I said, okay, maybe you're right. So we bought some pounds and that went up. And then he never wanted to do any model building after that. So,
really?
Yeah.
Was he?
It is a waste of time. I mean, if I can tell when Margaret Thatcher is going to stand up, what do I need to build these models for? And he was right. And we had a very lucky streak. And but finally, I really did want to build some models. So, in fact, what we needed was a very good computer guy who happens to be sitting right in front of me here, who came to work for us, and we brought some other mathematicians, and we did build some good models. And then I could see after a while that the models were a better way to do things than fundamental training, which is just for me, it was just too gut-wrenching. One day you come in, you think you're a genius, the market's your way, oh yeah, and the next day you come in, oh, you think you're an idiot. And, even if you're a genius one day more than you're an idiot, it's still a very stressful way to make a living. The model building made sense, and we managed to build good models. And more and more, we brought more and more mathematicians in and other scientists, physicists, astronomers, guys like that. And just kept building that up, and it worked.
So what about physicists, astronomers?
I love astronomers.
What makes them good financial model builders?
Well, it's a big data set. I mean, that's really the way we look at these markets. They put out a lot of data. There's price data, there's volume data, there's all kinds of data that comes out. And the goal is to analyze this data stream and try to figure out, at least probabilistically, what's coming next. And so it's kind of like code cracking, except it's a little more vague. At least in code cracking, there's a machine that's doing this, and it has some structure to it. Here, it's the human race that's making these things happen. But still, there's certain predictable features. There's certain non-randomness in these data streams. There's certain things that can be tickled out. And that's what we did. And I say I like astronomers because astronomers, physicists can make an experiment. He can see, let's see what happens. I'll put this and this, or a chemist, I'll mix these two things and whatever. But an astronomer, he just looks at the data. He plays it. He cannot do an experiment. He cannot say, I wonder what would happen if this star crashed into that star. You can't do that. He looks at, all he can do is look up in the sky, or metaphorically, with radio frequencies, whatever, and get the data down from the heavens and try to dope it out. What's going on? Obviously, there's a lot of theory that people bring to bear, but those guys have to play the data as it lays. They cannot create their own data. And we can't create our own data. We can't do a little economics experiment. People won't be cooperative, really. So you just have to play the data as it lays. In any event, mathematicians, astronomers, physicists, they've all been very helpful to us.
Do you find that cryptanalysis is particularly useful, or no more than the others?
No more than others.
Okay.
No more than others. We have hired some very good people from that area. But it's really, we hire people, the company does, who are on the research side, who have demonstrated that they're good scientists and who express an interest in this kind of work And most of the time it works out pretty well. It doesn't always, but then, most of the folks we've hired have done very well. So that's,
Mm-hmm.
and we just continued to build this. We started it we went all technical, I think, in '88. And so it's been, whatever it is, 20 years of all technical stuff, more than 20 years, 20.
And this is true of all your funds, or?
Yeah.
I see.
Yeah, we don't do anything that's not completely model-driven.
Okay. But now the Medallion Fund seems to have been the most spectacular, and
Yeah, it's gone the longest, and since 1988.
but it's also done better in general. I mean,
Yeah, and it's also capped in size.
right.
So it exploits a certain set of features, but like anything, you can't do too. The market will only take so much, so we had to cap that. We had to. In fact, the Medallion fund is now owned by the employees of the firm. The outside investors were all bought out over the years,
Right.
because we couldn't bring in more capital. We had to limit the capital.
Uh,
The other two funds that we've started are designed to hold more capital. It's a longer-term set of considerations. You don't need to trade as quite as quickly, and therefore they can hold more capital. But they're not going to be quite as good as the Medallion Fund. But good enough, we think. I have plenty of money in those funds.
yeah.
I like them.
So,
And you're all welcome to invest this.
I guess that is not literally true. That for a hedge fund, there are all kinds of